So Daniel, you finish your level 4?
Not yet. Not yet.
Okay. So you're doing level 5 as well, huh?
Both.
Okay, no problem. So okay, so we are going to start our new unit today, which is, just I'll show you first, and then we'll go through. So we are going to start our new unit is called accounting. Accounting for managers, unit 4. So we are doing unit 4. So let's will start. So unit 4, accounting for managers, how managers can use business accounting at the information in terms of to make decisions. So which we'll go through. So today lesson will focus on LO1, which is learning outcome 1, assessment criteria 1.1, 1.2, 1.3. Today lesson will enable you to explain the aims of financial and management accounting, accounting regulation, explain the main types of businesses, accounting information and their features, evaluate the role of different user of accounting and financial information. So we'll discuss different user of financial information, how they can use the financial information, where they can get the financial information, how the financial information can be interpreted in terms of decision making perspective. So all lessons will be focused on these points. Okay. Daniel, I think so you already learned about how many types of financial statement we prepare accounts.
I can't remember.
You can't remember. Is we discuss about profit and loss,
Yeah.
balance sheet,
Yes.
and cash flow statement, and we last statement we call shareholder statement. These all we prepare under the financial accounting. So financial accounting is mean the information which will provide the outside the financial organizations. Like the shareholders can get the information, customer can get the information, tax office can get the information about how much company on the profit or make loss. So all this information we provide in shape of financial statements. So that's our unit which we are going to start. Okay, any question, Daniel?
No, sir.
Okay, so we'll start. Okay, what do you know about the financial account, financial management, which we discuss in terms of level 4 as well? So now we are doing level 5 units. Anything come in your mind about the financial accounting or financial management?
Usually in the company, financial manager manage the finance. I mean, money of the company, the outside or inside of the organization.
Brilliant, that's all about, yes. So the financial accountant is external information, and management accounting is more internal management or management perspective. So which will go now. So today lesson is we'll discuss about difference between. Okay. So today lessons an introduction to financial management. We'll discuss about financial system, explanation of financial data and information, and then discuss how data can be interpreted and used. So our discussion will be focused on different stakeholders. Do you know what is meant by stakeholders?
The person who invests.
Yes, those people invest money in the business, also stakeholder. We also call them shareholders. Stakeholders mean anybody who has any interest in a business is called stakeholders. So anyone who has any interest in a business is called stakeholders. Stake mean is a part of in a business, so we can call them stakeholders. Okay. So this will go through now. Okay. So that's LO1. Today our major focus will be on LO1, which will go through all these things. So these are some recommended resources as well. If you want, you can research online. I'll try to upload some electronic version as well, so you can use for your assignment perspective as well. It's a 3,000 words assignment. All these are relevant resources for fundamental corporate finance, or you can use management accounting for the businesses. So these are some recommended books, which is recommended by OTHM, our awarding body. So this will go through. So these are our aims: introduction to financial management, introduction to financial system, explanation of financial data and information, discussion on stakeholder and user of financial information. So financial information, where we can get, how we can use it, all about financial information we can get in terms of the financial statement. That's under the financial accounting. Under the financial management, internal reports all provide us information like in costing, a production cost, standard cost. All these sort of costing information is also financial information, which the businesses can use to make the financial decisions. Because our title of the unit is accounting for managers, so we're looking more in terms of the financial management side. Any question, Daniel?
No, sir.
Okay, so financial accounting, financial management. So first we're looking the financial accounting is external. So primary user is external user, and management accounting is the internal, which managers of the business or employees can use the information, because it's a very hard for external under management accounting to get the information. Purpose of the information. So under the financial accounting or the financial statement, help investors, creditors, and others investment, so they can make investment decisions. So management accounting help managers to plan and control the business operation. Timeline, delayed or historical normally information, but management accounting accounts normally current and the future oriented. Yes, different restrictions under financial accounting. We need to follow different rules. We call IAS, International Accounting Standard 1. GAAP is called General Acceptable Accounting Principles. So GAAP, and these are the accounting standard which we follow and we prepare our financial statement accordingly. Nature of the information more objective, auditable in terms of the financial information with reliable, consistent and precise information. But in terms of the management accounting, more subjective judgment and valid and relevant and accurate. So scope is highly aggregated information in terms of the financial information, but in terms of the management accounting, disaggregated information to support the local decisions. Behavior implication, concern about advocacy of disclosures, concern about the report's effect features must be accurate, timely, compulsory under the company law. Company law or the Company Act we called in 2006 in UK, and different parts of the world the company law is slightly different. Like in South Korea, or where in Korea, North Korea, we have different company laws. Every country have a different company laws, so we have to follow under the financial accounting. But under the management accounting, there is no really as such a governing body for it. We can follow our own rules and regulation, or could be awarding bodies set, like SEMA, which is Chartered Institute of Management Accountant. So then we can follow their guidance as well. Any question?
No, sir.
Okay, so financial accounting and cost accounting, the management and the cost is also internal, and these are the purpose like we discussed. The user of financial statement normally is external. So next, primary document that provide us the financial information. So first thing we need to record our purpose of accounting system to ensure all the transactions are correctly recorded, can gathered together for the period in order to prepare a set of financial statement to ensure the business can keep the track of all its assets and activity to facilitate the measurement of the business and passing another form of credit to meet the statutory requirement, which is by law we have to follow, and we have to meet the requirement. So accounting systems start with the transaction, like credit sales, credit purchase, buying something. This is called transaction. Then we have a primary document which can be in shape of invoices, in shape of purchase order, in shape of different sort of receipt. So these are all primary documents which you have to receive, which we have to keep the record. Book of prime entries, normally the book of prime entries, sale day book, purchase day book, and then we'll prepare the ledger. So if you're a bookkeeper, you're keeping record, you can work up to the trial balance and you summarize of all the ledger into the trial balance. Any question?
Sir, what prime entry means?
Okay, prime entry we call is a book of prime entry, cash book, sale day book. We have a separate books, which we keep the record of are all the sales, all the sale return, purchases. So these are called book of prime entries. Any question?
No.
Okay. So prime document is mean sale invoices. These are the prime document we have to keep the record. This provide us financial information about the company as well. On transaction, like a sale, cash sale is the one transaction. We are selling goods and we getting the cash is a transaction. So that transaction is called transaction in accounts. Okay. If you have any question, ask me please. Okay.
Yeah.
So then we have a ledger account. We prepare the ledger, the total and detail of each book. Each prime book we can make one ledger for it, contain separate ledger for each type of income expenses. Like income can be different types of sales. We have an income, expense, different sort of expense like admin expense, distribution expense, We can make each separate ledger as well. Asset, liabilities, capital. We can sale ledger is contain the ledger account of each individual or receivables, which mean our credit customer to whom we sold the goods, to whom we have to receive the money. Okay, purchase ledger contain the ledger account for each individual payable, showing the amount owed to the supplier. When we have a credit purchases, we are buying our goods, but we are not paying money. We call the purchase ledger. It's mean our creditor, our suppliers. Okay. We already little bit discussed in level 4. Each in accounting have a principal double entry bookkeeping, dual effect. If we have a debit, there should be a credit as well. We call debit and credit rule, which is a double entry bookkeeping. Each transaction has a two effects on the business. Business buy the goods for resale with the cash, and the good have increased and the cash has decreased. So separate entity is mean the owner of the business can be treated as a separately. Okay, the accounting equation normally assets, the things we own, liability, the things we owe, and asset minus liabilities equal to our capital. Capital mean our investment in a business. Any question?
No.
Okay. We use the word debt at click for the debit and credit. D stand for debit, E stand for expense, A stand for asset, D stand for drawing. And when we look in the credit, so C stand for credit, L stand for liabilities, I stand for income, and C stand for capital. So this is normally the double entry bookkeeping rule we follow to record our business transactions systematically in the book of accounts. Okay. Any question? Okay. So next we financial data. What is meant by financial management? Under the financial management, we prepare budget, we organizational objective we set, we are evaluating our financial proposal, our financial performance. Okay. Data and information. There is sometimes a discussion about data and information. What is the difference between them? Data is the raw facts and figures, and information data with context are process data are the value added data, summarized, organized. Like we saying 10 million worth of the sale from which customer, so that data have a information as well. If just we writing 10 million and we're not writing what 10 million mean, so it's not a rough fact and raw figure. It can be expense, it can be anything else as well. So when data with the context is become information. Like here, data can be 51007 and information 5th of the 10, whatever, that's the past the date of your final exam, that could become a information. Okay. Data to the cycle with data, information, knowledge, and action. So first thing, always data. We need to collect the data. If we have a data, then we become a information. The data will provide information when we process it. So next layer is a information. Then we have a information. If you have a good for information, it become a knowledge. And the basis of the knowledge, you can take action. Data, information, knowledge, and action. So that's all come under the data. Data, information, and knowledge. Does it make sense?
Yeah.
Yeah, the financial data. If we have a financial data and which provide financial information, if we have a financial information, then we have a knowledge about the company, what the way is the company going, company is earning profit or loss, we are on the track or not, we are under or our budget, we are using more or less, So all is come under the, okay. Next is, are we looking how we'll manage the data and what sort of the data will help us to make different. So first learning outcome is explain the aims of financial management accounting and accounting regulation, like financial and the management, financial accounting and management accounting, and what regulation, like we discuss about gaps and we discuss about, yes, if you explain it, it's mean we are addressing. Explain main types of businesses, accredited partnership, limited company, that's main types of the businesses. It will go through. Next, financial data is derived from the many sources, stressed in a many ways and used by many people. Unfortunately, this means that there are many chances of errors. So if I have many data, it can be many errors. Capturing the right data at the right time and processing it reliably, correctly, and then sharing it in a timely fashion with the right people is a fundamental and organization financial control. Organizations often have a decide between the timeline and accuracy. So taking too long to capture and process accurate data may mean that the reaches and the decision maker too late. So a balance is always necessary in order to gain the maximum benefit in the timely manner. The validity of the financial data is whether the data is measured what it is supposed to be measured, and it's crucial to making well-informed decisions. So financial management need a financial data to make their decision, and data need to be reliable. It need to be validity of the data. Data is relevant to our decisions. Financial data, like we discussed earlier, data, information, and knowledge. So internal source of data, where we can get the data from. Accounting systems, we can get the data from directly from your suppliers, from your customers, numerous of personal spreadsheets, which is personal report we prepare in accounts. So those can be used as for the data. And external, the company house, websites, library, database, financial statements, all these provide the external source of financial data. So internal and external sources of financial data, which we can use it for the decision making purposes. Okay, first thing other we need to look around when we have financial data, we need to look around financial data. The information we have is a good information, always need to be some sort of good characteristic with consist of reliably. Who is saying it? Yes, where this data can, how much we can rely on it, how much is accurate. Data need to be accurate, up to date. If I'm using 10 years ago information, that not up to date. So we need up to date information. Relevant depends what sort of decision we are going to get. Is it relevant or not for us? Worth the cost. If we are paying money to store the data, collect the data, interpret, how much benefit we have in terms of cost and benefit analysis, easy to use and understand. Data needs to be easy to use and understand. Meet the needs of the user. Is it the data is meeting the needs of the user or not? If not, so we need to think about what's the point to collect the data. Any question, Daniel?
No.
Okay. Internal source of data, external source of data in your own organization, or if you're working, you can think about internal source of data can be, like we discussed, accounting system, yes, others managed direct from suppliers. So these are internal sources, external financial data in shape of the financial statement. So here given accounting system that can be influenced internal, indicator of reliability of the data, internal audit report, financial system design, internal checks and control, authority level, complexity of accounting system, all these are help to be controlled. Okay, publish accounts, they also provide the data, financial data, and can be influenced by the accounting standard, auditing standard, interpretation generally, gap, general acceptable accounting, the accounting standard in state, accounting statement format, nationality of parent company, and auditing. These are all provide the information. Published source of comparative information, approach the publisher, standardize the financial statement, accuracy. So these are all the sources of financial. What is accounting? What is the management? Accounting is mean the keeping the financial record up to date and preparing financial records and statement about organization. It consists of recording the business transactions in money term, recording the financial information to the owners and the managers, and advising the owners how to use financial reports and assess the past performance of the business. So it is a process of identifying, measuring, and communicating the financial information to permit informed judgment and decision. So this is all about accounting. Is a process of identifying, measuring, communicating financial information. So if we are doing it, mean we are doing accounting. Why do the company keep record? It's due to the internal control, provide checking procedures for all transactions, help to prevent the fraud, customer query can be addressed and use the generate account and meet the legal requirements. Okay, role of accountant to summarize, present, analyze, and interpret the accounts for the benefit of the owner and their interested party. Interested party means those are the stakeholders they have any interest in. So accountant job to be summarize, present, and analyze and interpret the financial information, and that will help the interested parties means stakeholders. Any question, Daniel?
Yeah.
So types of account, financial account concerned with the external reporting, and management accounting is externally. Okay, these we already explained. That is duplication. So next, effect. So effective and useful business is produce reports such as accounting report, cash flow statement, financial statement that will help us to make decision, analyze and the financial and accounting data. Effective, it's produce reports and these help us. Management accounting system, management system provide the financial information to all managers within our organization. Financial management system is a process and procedure that use the organization management to exercise the financial control and accountability. So financial management system to support financial managers in a decision making, because our unit title is accounting for managers. It means how the managers get the information and use it. So more we have a concern with we are under the financial management systems within our organization that we need to in place it effective use of. Okay. Feature of good financial management: keeping all the payment and receive transaction, prepaid expenses, depreciating asset according to the acceptable schedule, keeping record of liability, maintain the income and expenditure statement and the balance sheet, and keeping all the record up to date and maintain complete and accurate accounts, and minimizing overall the paperwork. Any question?
Yeah.
Okay, cash management is also part of the financial management. Cash management is a system collecting information on all the cash receipt payment of a company on the real time of the periodic basis, such as a daily, weekly, or monthly. Investment management. So many businesses invest their excess cash in the short, low risk market and higher the return alternative. So thus the investment income may be earned unit that the fund required. So investment information and securities trading are available from the hundred of online and internet. So these all come, so we need to look around, these come under the investment management. We need to be the part of financial management. Capital budgeting, process of involving evaluating the profitability and the financial impact of the proposed capital expenditure. So capital expenditure mean the money is being invested in the business as an asset, like extension of building or construction of new building or buying a new building, buying a new machinery, property, plant, equipment. All these are capital expenditures. Any question? Okay, financial forecasting and pattern. Financial forecast concern the economic situation, business operations, types of financial available, interest rates, stock, bonds, prices to develop the optimal financial performance of the business. Okay, goal of financial management should be maximize profit, minimize cost, and maximizing market shares. So that all come under the financial management. So accounting for managers, that will help them to maximize the profit, minimize the cost, and maximize the market shares. So maximizing the current value of per shares of the company existing stock and maximizing the value of the existing owner equity, which is mean the share capital too. Organization culture and financial control. The role of the culture and the approaches of the financial control is in assessing the areas one has become interesting. Academia, Enron collapse article. Enron was the biggest company of in states, United States, but they can't afford it to pay back money to their shareholders as well as their employees, and ultimately collapse. So all this we need to look around under the. So this is the video we can watch as well. We can copy the link. Hope so will work. Hope so. Let's will try. It's a long time ago I copied this link. Oh no, it's not link, not been copied properly. Okay. So sorry, currently it's not working, but we can use it later on. Okay, next now, financial statement. Yes, Daniel, like we discussed financial statement, how many of we prepared in accounts, income statement, balance sheet, cash flow statement, and statement of change in equity. These are the statements we prepared in business that will help us to manage our financial information in shape of finance. Yes, any question, Daniel?
No.
So this we already learned, yes?
Yes.
Okay. So stakeholder internally, stakeholder mean anybody who has any interest. Internal can be employees, and managers. And external, HMRC, local government. So these are all external. Okay. So different form of businesses, like we discuss is a part of your learning outcome as well, which we need to types of businesses. Yes. So that's different types of businesses. We have sole trader, partnership, and limited company. So sole trader mean one person business. Partnership mean two or more, up to maximum 20. Limited company means they registered as a limited company, and we registered under the Company Act. But the partnership is come under the Partnership Act regulations, none in terms of trader, but in terms of the partnership is the written partnership agreement, and in terms of the limited company memorandum and article association, which mean who will do, how much share capital we have, that all we need to explain when we register with the registrar of the company. So management on makes all the decision, all the partners normally take the decision, but in terms of the company, director is board of management, they make the decisions about the companies. Any question, Daniel?
Yeah.
So next we have, so these are the different types, and different financial information, different organization they use for different perspective. So next we looking the user of the financial statement. So investors, they are interested in term of, is the company is making the profit? Can the company pay its way? And what was the revenue, the figures of the company? So what they are interested to assess the performance of the management, how they can pay in the dividend, to see if they will continue the trading, to see if company is expanding or declining. So all this is provide the information in terms of the financial statement. Lender, they are looking different sort of information as well, as the company made the profit, what accounts amount they're currently loan, what is the value of the asset. Suppliers can be the company pay, it's the way, what is the value of the asset. So all these are different user, and they have a different perspective or different interest, and different decision they normally make in term of it. And they make, and they use the financial information for a different perspective. Any question, Daniel?
No.
Question? No? Yes?
No, sir.
Okay. So this is more generic discussion. We can use some data. We can embed some data to any company financial statement, like we discussed in level 4 as well. So there is a quiz as well on the profit and loss and the financial information. So I'm not going to play it, but if you want to play with it, so please, what you can do is a good to be. You can do a bit, that will help us, to understand about the like we did in the level 4 as well. So if you copy this link, hope so this one will work. That not work for us today due to the maybe the website down, or sometime even the password and things change. So let's we'll go through this one. Okay, sorry, it's taking a while. Okay, Daniel, this one you can use as well, huh? You can play the quiz later on, huh? This is all about the profit and loss account, okay? We're not doing it because you can just play with it. It's not okay. So useful resources, if you want further something to learn around and you want to find some more information about, and when you write your assignment, these all website will help you as well. Okay, any question?
No, sir.
So please go through these, and then of course we'll do lesson next week. We have a lesson as well. Yes. So next week we'll go through. So today all about we learn about. If we'll go back to our What we're supposed to explain the aims of financial management, financial accounting, and regulations. Explain the type of businesses and financial information and future and different stakeholders, different user, how they can use of different, and they have a different role of it. So that's all we learn about, and that's all you have important to in terms of to address learning outcome one. So please, you can start writing your assignment side by side. You can send me, I can give you feedback, and we can keep, moving, keep our, carry on, and we'll carry on completing our bit and pieces. Yes, Daniel?
Yeah.
Okay, so we'll keep today is here. If you have any question, you can ask me now.
No, I don't have.
Okay, in later stage, if you have any question, you can ask me as well. We'll go through in the next lesson, prepare the book of ordinal entries. We'll go through and we'll prepare our trial balance, and we'll construct our final account, including the cash flow statement. We'll go through and we'll prepare some accounts and make adjustment for the bookkeeping and the final accounts, so which I'll show you some bookkeeping and the final accounts as well. So that next lesson will address our LO2, and then we'll move to our LO3, which is ratios, and LO4, which we'll go through as well. We'll try to summarize everything in lesson 4. I'll go through further assignment brief as well. Okay. So that's all today. So today, just a recap, we learn about difference between financial management, financial accounting. So what is the difference between?
Sorry?
What is the difference between financial and financial accounting? Which one internal, which one external?
Financial accounting is external.
Well done. And financial management is internal. And how many types of financial statement we prepare?
Around the 4.
4. Well done. And we can start business types of ownership and the businesses: sole trade, partnership, and limited companies. And stakeholder mean anybody who has any interest in a business is called stakeholder. So all discussion LO1, we need to address our learning outcomes. Okay, so I'll keep up to here and we'll go through next lesson, LO2.
Yeah.
Okay, have a nice time, have a nice weekend remaining, and have a nice week forward. So I'll see you next week.
Okay, thank you.
Thank you. Bye-bye.
Bye-bye.